Oh, we're live.
Yes,
Hey,
sir,
good morning,
we're
everyone.
live.
It's the Cowboy. I am the Gorilla, and we are back on Algo Factory Tech, the only place in the world where we teach you not only how to trade, but to build the algorithms that trade on your behalf 24 hours a day, 7 days a week. And with that being said, Cowboy, good morning, sir.
Good morning. How are you?
I'm doing good, man. I mean, I can't complain. I mean, I could complain, but who the hell is going to listen?
I think I'm going to take profit on this trade right here. We got the data that came out. Big
Taking
fat candle
profit
up.
is racist.
Totally racist, but I'm doing it right now.
Okay.
And I'm taking it because, look, here's the thing. What I've been doing, I don't generally trade news, right? But if I'm in a trade and I know the news is coming out, let me go ahead and move this down so we can mark out the profit area. And I'm, let's just say I'm a little bit ahead of the trade because right before this news came out that I've been tweeting out and putting in our, private group, like, hey, the news is coming out, you know what I mean? Just, whatever, right? So, I mean, it's been very obvious that it's coming. I've been very vocal about it. Well, at the time of the announcement, the trade was here, so I was slightly ahead. And this is the trade I took yesterday during our private show. One of two trades. I took a JPY trade that was a little more risky, both relatively small entries, just because all the data coming out. And that trade actually stopped out. It went right down to my stop and then went right back up. It's kind of annoying, but these things do happen. Well, in this case, the Euro trade just kept going in my direction. And then because it wasn't that far into profit, what I'll usually do before major announcements is I will either exit a trade or I'll tighten up stops. And in this case, what I did was once price got into, a certain level of profit, it came back down, created some support right there, and then continued back up. I just moved my stop loss to right above my entry so that whatever happens when this news comes out happens. Now, it might have gone and, stopped me out without any kind of loss, or it might have done like it did and go in my direction and give me some nice profit. Now, this candle is pretty sizable. It roughly is about the same size as yesterday's news candle, right? So the news candle from yesterday, which was the PPI, that's the producer price index, that was the news candle. Today's candle, as I exited the trade, is about the same size. Now, there is more news out today, but CPI and PPI are comparably about the same amount of importance. Actually, CPI tends to be bigger, but the PPI gave us clues as to what was going to happen with the CPI because producer price index is upstream from the consumer price index. So, given that that's the case, given that there's that little bit of luck involved and where, okay, maybe they didn't fudge the data, or maybe the data didn't come out in some weird way opposite. This was a decent bet, and obviously it paid off, and I went ahead and just took profit here because why not? Why, you have a clear candle up that is very indicative of what the market can do based on very similar data. And so I just took profit, and already it's paid off because I took profit, higher than it is right now. So that's the trade. That's the scenario. Now I know that, we're not like a signal service. That's not our job. We're not there to, hey, take this trade, make some money. But I do share my trades over at Algo Factory, right? So we know a lot of people are using that as data and creating their own trades, and their trades sometimes look an awful lot like my trades, and that's fine. So, a lot of people saw me do this during the private show yesterday when they were watching live. So, so that's that. And that was better than a 1-to-1. So it definitely made up for the JPY loss yesterday. So always nice to win a trade. Let's see what the data actually says. Let's see what it says. There's a lot today, not just CPI. Let me refresh the screen. All right, Wednesday. Okay, so CPI was in line. Retail sales was in line, meaning that it matched the estimate, right? So according to, if you really believe these numbers, because they're a little hard to believe because they get, more than half the time revised a few weeks later. We're not really talking about believing the numbers. We're talking about what the numbers do to the market, right? Like, we're very pragmatic over at Algo Factory and over at Rogue. We're not concerned with, hey, they fudge the numbers and the world is a lie. Like, okay, fine, whatever. Make money on the lie. Like, we're not here to be moralistic. We're here to make cash. And so these numbers are in line with estimate, which means that the market's probably not going to move a whole lot based on this. Now, the CPI month over month is actually a little bit lower than expected. So this is the only out of the CPI. Okay, this is retail sales actually. Sorry. So you got core CPI, CPI month over month, and year over year. Year over year was as expected. Core CPI month over month was as expected, and the CPI, which is a little different than core, came out just slightly below. So it was actually a cool number. Now, yesterday's PPI number was warm. Okay. So that being the case, the numbers actually were a little bit off, right? They weren't quite the same. Empire State Manufacturing Index also was a little, we'll call it cool, right? It didn't come out that hot, meaning that the manufacturing is not doing that well. And when you have numbers like this come out cool, that's going to be weak for the dollar, strong for anything against it. Now, yesterday's number was actually supposed to be dollar strong. And initially, the market reacted as such. And we'll show you this. Okay. So actually, when I compared these two candles, I should have, let's correct ourselves here. This was the candle I compared yesterday to today's candle, but in reality, it was this candle, which is again about the same size. So let's correct that. Secondly, this candle actually initially reacted as it should have per the numbers because it pushed down and then went up about the same. So this interesting push up, right, for the PPI to be as off as it was, for this to have supposedly been dollar strong and then act dollar weak, that should be telling us quite a bit. And what happened yesterday was with Powell talked not long after the PPI was put out. Powell talked an hour and a half later, and everybody is saying that his conversation was indicative of no more hikes, possibly, and possibly even cuts. Now, V the Gorilla, you've been saying for like, oh, dude, I think more than 6 months, you've been saying that they're going to have to start cutting.
2 years.
Privately and then publicly, and I imagine you're still of that opinion.
Yeah, they have to start cutting. I mean, at this point, it's an event-driven thing. I mean, how much longer can they keep doing this? There's a lot of back pressure that is occurring. Yeah, they're keeping the dollar high. The USDX index is high, and it shouldn't be as high as it should be. There's a lot of happening in behind the scenes with dollar de-dollarization and everything else. I mean, look at what's the DIA? It's what, 104?
The Dixie's down to, it's 104. So
it's preposterous. It's the most insane thing in the world.
Let's back this out and take a look at a higher time frame. We'll look at a weekly chart on that. Yeah, so
it's
Dixie after 2021 really pushed up.
Yeah,
after all the rate hikes, and it's just been rotating right here between basically between 100 and 105, more or less.
Exactly. So that's the whole entire situation here, guys. It's like they have to cut pretty soon because at some point the cheap money's got to flow. Cheap money don't flow with the interest rates being where it is right now. It's there's a lot of bottlenecks here, and yeah, they're trying to curb inflation. You can't curb inflation, not in the central banking system. Cannot curb inflation. You can only move inflation around, right? So you're not seeing it in the equities. You're not seeing it in anything else. So but you're seeing it in consumer within the consumer prices, right? Of energy, of food, of so many other things. The market has been retardedly high for this long for no reason.
I was gonna say you kind of seeing it in equities because this. I mean, that's where they're hiding the inflation.
Correct. So now they got to take it to the next level. You want Dow 50,000, then you have to cut the rates because that's the only way to do it. Because they can't control the inflation. They've lost control of it. Honestly, they can't. But that's where we are, man.
Well, yeah, Dow has already hit. We're looking at it now on the screen, like 40,000, and that's something that you called out Dow 35,000 years ago. You called out Dow 40,000 last year.
Yep.
It hit there in March, so it recently topped out at about 40,350.
Yep.
And it actually there have been what I imagine to be some true deflationary pressures on the market because basically people are out of money. At this point, they've been taking a look at household savings, taking a look at credit cards being maxed out. You have a lot of loans, especially car loans, that are starting to default. People can't pay their student loans. Like there's a lot of problems with money velocity. And in order for stocks to continue to go up, there needs to be money velocity. When money velocity is grinding to a halt, you saw it on the Dixie where the price was, headed up. Now it's just kind of rotating between 105. And so when money velocity dumps like that, then the stocks can't just keep going up forever. They're not supposed to. Now, of course, we didn't have a chance to have Expound and Profound on last Thursday. You didn't have internet that day, if I remember correctly.
Correct.
So we're going to have him on as soon as we can, probably next week. I haven't actually heard back from the guy. He's a pretty busy guy. He's one of those guys where you get a DM from him like a week later. Hey, what's up? Like, oh shit. So he has an entire theory. You can just go see it on Twitter. Look for Expound the Profound. Cutting through the BS one layer at a time, and he maps out right for you. I mean, you don't really have to have him on. He just puts all his data out there. It's not some big secret where they're crushing the VIX to keep prices from falling. So the way that markets work, right? VIX is volatility. Volatility is when volatility goes up, whatever direction price wants to go, it goes in a hurry. So if the market's bullish, volatility rises, then it goes up hard. If the market is bearish, volatility rises, the market goes down hard, right? So what it seems that they're doing is when the market is starting to get bearish and maybe hits resistance, it starts to want to arc down, you'll notice the VIX gets crushed and then it just hangs out where it is for a while. And then the market closes and then the VIX is allowed to go back up. And then when the market reopens, and if things are bearish and want to go down, they just crush the VIX again. And then it hangs out where it is, and then it just keeps going up, So essentially what they're doing is when the market wants to go down, they're killing volatility. They're not allowing the market to go anywhere. How do I like describe this? So it's like herding sheep, and the sheep want to stampede in the wrong direction. So they put the sheepdog out there to keep them from going the wrong direction. And then when the sheep want to stampede in the right direction, then the sheepdog lets them go. This is what they're doing right now. And that, I believe, is pretty costly. I don't think, they've been using the bond market, oil, and the VIX. And so, and Xpound did say about 2 weeks ago that he finally figured out what exactly they're doing. So it'll be excited to have him on. But this is chicanery. This is, this market should have been allowed to go down some time ago. But, whoa, gosh, heaven forbid the stock should ever go down, especially in an election year.
Heaven forbid any company like Boeing should be failing right about now.
Oh, dude, that's one of the things that the Xpound picks on like every single day is like all this terrible news for Boeing, and it just keeps going up. Like, people
makes no sense, bro. I mean, like how many whistleblower? I mean, it's just coincidence, guys. That whistleblowers are just dropping dead left and right. Totally coincidence. It's
just dangerous to be a whistleblower for Boeing. That's all.
Yeah,
that's all. I mean, you look at Boeing from May of 2022 all the way to now, with the exception of the last, say, going back to December. Like they're having a hard time hiding it. But even so, I mean, Boeing, you think that you would have seen some trouble, but for some reason, for 2 years, it's just done nothing but go up, even though you're having all these problems. So, hey, man, let's kick it over to the private.
Absolutely. Guys, join us over in the private. Listen, don't sit on the sidelines wondering if this is for you. This is one of the last shoes to drop. This is one of the last ways you'll be able to generate an additional stream of income and learn something that could take you anywhere in the world. You could trade from anywhere in the world in any market with our system. Don't let this opportunity miss you by for less than $1.66 for about $1.66 a day, less than the price of a bottle of water. Join us, algofactory.tech. Links are in the description box, Cowboy. Let's go private.
Join us or die.